The U.S. energy sector remains one of the largest and fastest growing in the world. It includes companies engaged in the generation, transportation, and distribution of energy. In 2024, the sector continues to be transformed by the energy transition to renewable energy, artificial intelligence, and digitalization. We invite you to familiarize yourself with the key players and their performance in the past year. Number 1. NextEra Energy, NE. Turnover in 2024 was $28 billion. NextEra Energy is the largest producer of renewable energy, solar and wind. It is a leader in green energy and is actively deploying AI to optimize wind and solar farms. NextEra Energy uses AI extensively to predict power generation and manage the grid. Number 2. Duke Energy. Turnover of $26 billion in 2024. Duke Energy is one of the largest energy companies engaged in energy generation, transportation, and distribution. The advantages of Duke Energy are a wide diversification of assets, including RES and conventional energy sources. Duke Energy ubiquitously utilizes smart grids and AI technologies to manage grid load. Number 3. Dominion Energy D. Turnover of $20 billion in 2024. Dominion Energy, a large company specializing in electric power generation and distribution. Active development of wind and solar power, as well as AI-powered energy storage projects, have been Dominion Energy's advantages in the U.S. market. Number 4. Exelon Corporation, EXC. Turnover of $34 billion in 2024. Exelon Corporation, largest operator of nuclear power plants in the U.S., also involved in energy distribution. Stability through nuclear power and investment in grid digitalization have been advantages in the industry. Exelon Corporation is actively implementing AI to monitor and control nuclear reactors. Number 5. Tesla Energy, a division of Tesla Inc. Turnover of $12 billion in 2024. Tesla Energy, leader in energy storage solutions, Powerwall, PowerPack, and solar energy. Tesla Energy uses AI to optimize energy storage and distribution, develops modern, innovative technologies for integration with electric vehicles and smart homes. The above companies represent significant attractiveness to investors. In green energy, companies such as NextEra Energy and Tesla Energy attract investors due to their high growth potential. Companies with diversified assets like Duke Energy and Exelon offer stable dividends, and the widespread adoption of AI and digital technologies is making companies like NextEra Energy and Tesla Energy more efficient and attractive. Growing demand for electricity. What does this mean for investors? The world is entering an era of energy transformation, but few realize that the key problem is no longer oil production, but sufficient electricity. Demand for electricity is growing faster than analysts expected, and this is creating both threats and investment opportunities. Why will the world face an electricity shortage? According to recent projections, global electricity consumption will increase by more than 3,500 hours in 3 years, the equivalent of the electricity consumption of an extra grid-connected Japan. The development of AI and data centers is an ever-increasing amount of computing that requires massive amounts of power. Can you imagine one modern data center consuming as much energy as a city of 50,000 people? The growth in production and sales of electric vehicles and charging stations indicate that the shift to EVs is accelerating, with charging infrastructure requiring a significant increase in energy supplies. The development of 5G and cloud technologies as data processing and connected devices significantly increase the load on networks. Cryptocurrencies and mining. Despite volatility, the crypto asset industry remains a significant consumer of electricity. Why is the power grid not keeping up? Aging infrastructure. Most of the power grid was built decades ago. Modernization is slow. Lack of investment. The energy sector requires huge capital investments, but many projects stall due to bureaucracy. A bias towards renewable energy. Renewable energy is actively developing, but the instability of solar and wind generation creates additional risks. What investment opportunities does this create? Conventional generation, nuclear, gas, coal, remains the key source of stable electricity. Despite the trend towards decarbonization, these assets are in demand in conditions of capacity shortage. Companies that own power grids and infrastructure will benefit most from the growth in consumption and the need to modernize the energy system. Manufacturers of energy efficiency equipment will supply the growing demand for energy storage, grid improvements, and smart consumption management systems. Thus, rising energy consumption is not just a technology trend, but a key investment theme for the coming years. Investors who correctly position their assets in this area will not only be able to protect capital from volatility, but also realize significant growth in returns. Energy boom. Which companies will benefit from the growth in electricity consumption? We have talked about global energy consumption growth, which is already outpacing infrastructure development. However, some investors have expressed doubts as to whether the issue is really critical. The key issue is not generation, but networks and infrastructure. Yes, generation is growing, but it is not enough. Why? Time factor. New capacity takes years to come online, while consumption is growing right now. Grid wear and tear. Power grids are overloaded and their modernization is not keeping up with demand. Regulatory barriers. Nuclear and gas projects require lengthy approvals, while renewables remain unstable. In this part of our video, we draw your attention to the companies that experts believe are benefiting from energy growth. 1. Power generators. Companies that operate power plants. These companies get stable demand and will be able to increase generation and rates. Southern Company, SO, one of the largest power suppliers in the US, is actively modernizing the grid. Exelon Corporation, EXC, the largest operator of nuclear plants in the US, which benefits from the growth of stable energy consumption. 2. Grid operators are companies that provide electricity transmission. Grid renewal is inevitable, and here investment growth is already very active. Energy Corporation, ETR, serves the southeastern US and benefits from growing consumption in industrial regions. PPL Corporation, PPL, a leader in grid modernization and implementation of intelligent flow control systems. Number 3. Equipment manufacturers, companies that provide solutions for infrastructure modernization. Power companies need new technologies for automation and grid upgrades. Powell Industries, Powell, supplies equipment for power grids, benefits from increased infrastructure investment. Why are these companies promising? Stable cash flow and regulated rates provide predictable returns. Dividends. Many of these companies pay stable dividends, making them attractive to long-term investors. Revenue growth. Increased demand for electricity ensures that their revenues will grow. Growth in energy consumption is not a temporary trend, but a long-term change in the structure of the economy. While energy generation is increasing, the lack of grid infrastructure, the difficulty of starting up new capacity, and regulatory barriers create real investment opportunities. Investors who build their portfolios with this trend in mind not only protect capital, but also gain a strategic advantage by entering the future beneficiaries of this trend before the rest of the market digests this information.